In this 100th episode of the SLO County Real Estate Podcast with Hal Sweasey, the team sits down to discuss the current lending landscape with Ben Lerner from Certainty Home Lending.
If somebody's ready and they're telling me we've only have 10% saved up for a down payment and we want to buy this house, but we're going to wait till we get to 20%, I would show them how they could do it at 10% and describe why they're likely going backwards in that instance.
That's not a place you want to be when you're doing a marathon, and home ownership is just that. If your house appreciates faster than you can save the 10%, have you really won the race if you get a loan that is just 1.5 points lower? Lots of answers to lots of questions about lending in the 100th episode of the SLO County Real Estate Podcast.
Okay, let's go. Let's do this.
Oh, I thought we were recording.
We probably lost our best stuff already.
No, I'm not.
I can't remember what I said 2 minutes ago, right? Good thing you're young. You haven't lost your memory.
Let's get something to throw at me.
Oh, no. You'll know. Trust me.
Well, we've started already. We've had a great conversation. The San Luis Obispo Real Estate Podcast. We're rolling. I'm not even sure when we started, but there's been great conversations going on. So we're just going to go from here. Hal, how are you doing?
I'm feeling like I've done 99 of these before today.
Yeah, I know. That's
Thank
right.
you.
Yeah, exactly.
Number 100.
JT,
did you push the record button? Are we going?
I did hit the record button.
Yes.
But it's Jeff's doing the audio, so we have it all.
The
I'm
99 and a half.
I'm multi. I'm producing. I'm not speaking a whole lot, but I'm helping. And I'm watching JT. How are you, sir?
No excuses, James. Come on, you're killing me.
I made a mistake.
Better.
I made a mistake. And then you heard her voice. Bobby, how are you?
I'm lovely.
And we have our very special guest back, Mr. Swayze. Who is it?
Oh, I was hoping it was me when you said that. No, Ben Lerner.
Yeah, Ben.
Certainly
How are
Home
you?
Loans.
Thank you.
Yeah.
Did we give Ben our traditional clap? Yeah, last time. Thank you. Yeah. Ben, we appreciate you being here.
Yeah.
Thank you so much. We know you're
My
busy.
pleasure.
Your interviews with the Wall Street Journal. So
It's a big deal.
Big deal.
Yeah.
Big deal.
Yeah, legend in my own mind.
Yeah, you are. So Ben's here, and that means we're going to probably talk about something specific.
Ben, maybe I'll ask you this question because everybody asks, when are rates going to go up? Everybody wants to talk about rates. Everybody wants to talk about the market and prices and real estate and interest rates. So here we are, almost middle of the year in May, and what the heck? What are we supposed to think about rates? What's your take on where they're going and where they've been?
As we're ending the year last year, we started to get some wind in our sails based on the data, and rates went down meaningfully, down to near 6% on a 30-year fixed for most people. And
they're what today?
Today they're just over 7%.
Okay.
Yeah, maybe 7 and
So
8. 7 and a
perspective.
quarter. Correct.
Yep.
And then it stayed that way for a few months. And we felt like they were really getting some momentum. And then the data started to be flat, more or less. And that's caused the rates to rise again, and basically kicking the ball sideways for the Federal Reserve to implement some of their economic lowering of their interest rates and some of their incentives. Mm-hmm. I'm optimistic. I hope the rates don't go up any further.
Right.
To answer your question on that.
So they kind of bumped up, and now, if I'm hearing you, we're staying pretty flat the last few months. And
you can kind of think about rates going in, they call them levels of resistance, but it's an easy visualization to think of it like a lap lane pool. Mm-hmm. And maybe within our current lane, it's a pretty big lane. There's maybe 0.3% that you're going back and forth in that lane. But you still have those big plastic lap lane lines to get over. And so you need a catalyst to get to that next lane, either up or down. And so we're waiting for that next catalyst. And right now, today, as a matter of fact, we're rubbing our shoulder on the bottom of that lap lane line. So we're on the low side from where it's been in the current level of resistance, which is good. We just need a little bit of a nudge to get over to the other side and start heading down meaningfully on the other side of that lane.
What's your mortgage loan activity around applications right now?
I have more prospective buyers right now in my pipeline than ever before.
Okay, so that's good news for all the buyers agents in the community.
Correct.
Huh? Okay.
There are people want homes.
People want to buy. What are they waiting on?
I'd say it's a combination of inventory for some, interest rates for others, and interest rates and inventory for others.
Yeah.
So, yeah, combination. Definitely very busy activity, though.
And are you doing anything special, creative to help buyers get the home that they want?
Only offer that I really push is that I don't think we're going to be in this level of resistance in this market that we're in interest rate wise very long. And that could be towards the end of the year. We'll see what's the catalyst to start making meaningful change. In the interim, I offer up to all my clients no cost refinance. And that could be more than once over the next couple of years because the rates are expected to go down.
So you get a fixed rate now. If they adjust to the favorable lower level, then you can lock them in, and there's no cost to the borrower for that.
That's correct. And if we lock a loan, let's say somebody gets into contract tomorrow, and over the course of the next couple of weeks, maybe they have a 30-day escrow, and over the course of the next couple of weeks, the rates do drop meaningfully, we'll float down to a lower rate for them. We call it a rate renegotiation when we do that.
Good.
Yeah.
What are 2 or 3 of the biggest catalysts that are going to affect rates either up or down?
Yeah, I mean, everybody's been watching inflation. You know, the Fed's favored measures, the personal consumption expenditure report, the PCE, and all of these reports that are about inflation. Inflation, because of the way it's compared year over year, is probably not going to move much for a long time. Maybe towards the end of the year, we'll start to see some meaningful movement again. But because of the year over year comparisons, those numbers are likely not to be very big changes. They're going to creep up or down 0.1% at a time, most likely. The impetus then falls on employment data, and that's really what we're really watching.
I have an opinion, and I would like your opinion of my opinion. How's that?
Love to.
And if you disagree with me, you're okay.
Okay.
I'm looking for a debate if I'm off base. You have a number of people in your queue that want to buy a house, right?
Yes.
If rates go down, most of those people are going to be jumping into the market as quickly as they can, and the market will be flooded with more buyers. I don't know about flooded the right word, but there will be more buyers.
I would agree.
And if there is the equal or same number of homes for sale, my opinion is that's going to drive prices probably upward.
I would agree with you.
Okay.
And I would further it by saying that because we know we're already short on inventory, I think that even if there's more inventory in, regardless, I think there'll be more inventory because people will be selling more as the rates
So
drop.
even if we have another 100 houses in the county on the market, prices probably will still go up with a lower interest rate, is what I'm hearing you say.
Yeah, and we're seeing price appreciation now. I don't see how we're not going to continue.
So it sounds like we're both thinking similarly.
Correct.
So what do you do as a lender to try to get people that are in your queue to go now with the current interest rates? Because if I buy a house now for $1 million versus waiting a year, and let's say just conservatively, values go up 5%. A year from now, it's going to cost me $1,050,000 to buy the same house,
Right.
and maybe I spent $500 or $600 a month more in payment.
Right.
And if I can qualify for it, it sounds like I spent $6,000, $7,000, $8,000 out of pocket to get $50,000 of additional equity. Wouldn't I want to do that?
If they're ready, I encourage people to buy. You know, it's just like trying to pick the timing on a stock or anything. I'd say real estate's a heck of a lot more stable than a stock. But, you know, the time to buy if you believe in something is to buy. When's the best time to buy, John?
Yesterday.
Okay, so, I mean, that's...
He loves being teed up.
I know. When's the second best time to buy?
Today.
Exactly. From my perspective, if somebody's ready and they're telling me we've only have 10% saved up for a down payment and we want to buy this house, but we're going to wait till we get to 20%, I would show them how they could do it at 10% and describe why they're likely going backwards in that instance.
Are there many that are easily nudged off the ledge, or do a lot of people have they're just set? No, I'm not doing anything till the rates go down.
Well, yeah. I mean, my job, I'm a banker, so I'm not paid by the program, by the interest rate. My job is to help a client understand the numbers, understand what they're doing. And I take that fiduciary responsibility very seriously. I want to make sure that they know the numbers, they understand what it means to them. Part of that to me is their financial health and their wealth. And so if I look at it from a wealth perspective, the sooner somebody buys, they're invested. That's how I look at it.
Well, and you're never going to make a loan to somebody who can't make the payment, right? I mean,
No, the banks are very strict about that.
That's kind of against the rules, I think.
That's part of the Dodd-Frank. We have we call it ATR rules, ability to repay, and all banks are held to a very high standard in verifying. If you recall back in the old days before the 2008 meltdown, we had stated income loans, stated assets, we had loans, all of that went away. It used to be a client would come in and argue, I'm looking to get a $100,000 loan on $1 million house. Who cares what I make? And that's common sense. Well, that common sense is gone. You still have to prove that they have the income to make that $100,000 payment.
People always think that it's a daunting process. Anything changed recently in just the process for somebody to get a loan?
The industry has continued to evolve. There are players in my space like Rocket Mortgage or internet companies that focus on, they hire telemarketers instead of loan officers, that somebody calls in, they take an app, they throw it against the wall and see if it sticks. If it doesn't, they don't know how to, they don't do what I do. They don't know how to originate a file and make sure that it happens. And that's one way you could say it's easy. Then there's the rest of the industry that's serious. And I would say what's happening now is AI is part of our job now, which is kind of an interesting aspect to think of. So we have our company, Certainty Home Lending, which is a DBA under guaranteed rate, which is the second largest lender in the country. We've had an impetus for the last several years where our owner has demanded, why does it take so long to close a loan? And so he set an impetus 10 years ago to saying, you know, I want it to be 14-day process, when it was the average at the time was 29 days to process and fund a loan. And then that changed. Now we're currently running about 9 days in our company. And so they've instituted something called same-day mortgage in our company. And it basically, when we put a loan in, and I run what's called automated underwriting, sometimes realtors refer to it as a DU, which clients may know it as, which stands for desktop underwriting. And we run this program, and it tells us right away whether the loan qualifies for same-day mortgage. And about 60 to 70% of our loans right now qualify for same-day mortgage. And at that time, if I click yes on it, do I want it to go to same-day mortgage, it goes over, and a special underwriter processes, underwrites, communicates with my client directly, with me involved, directly through, and we normally get loans done. We call it same day. It's normally just a couple of days on that process. And we do that even on self-employed borrowers. But the way we do that is we're using AI for income verification, for employment verification, for bank verifications, for all of this information is going through AI now. So from a client perspective, a lot of the work, going back to what you're saying, what's changed, a lot of the work that used to be so arduous about fetching this or fetching that, I'm not saying it's all done,
Yeah.
but it continues to be eased by some of the technology that's in the market now.
Yeah.
So you don't have so many bank statements or pay stubs or stuff like that.
Right.
Not
When
as
you do
much.
your application, you can link your accounts. And then we as the bank, it's like a limited power of attorney. We're just going to pull just what we need. And I tell clients, in general, they're abbreviated statements. So if you don't want me seeing your statement, I'm seeing less than that than I am if you give me a full paper statement.
Obviously, some applicants don't qualify. And I was wondering kind of what percentage of people, when they're talking to you, you're not in a position to get them a loan today. And then what type of activities do you go through with them to help them get to the place where they can qualify for the loan?
I mean, it'd be two things, really. Typically, it's debt to income ratio, meaning either they're not making enough to qualify, which can be caused by a variety of things. Either they have too much debt service, the common, the entitlement client who maybe drives a Mercedes but can't afford the condo they want. Like I said, I take my fiduciary very seriously with them, and I'll say, hey, this is some of the changes you could make. And then there's rapid rescore stuff where the credit score isn't quite where it needs to be. So we'll work to see how we need to get this person able to qualify for A paper loans, good paper.
And how quickly can someone
Right away.
impact their credit score?
Yeah, we have a client. Matter of fact, it's a client in this office right now with one of the realtors on Hal's team, and he's closing on a sale tomorrow, and he's already in contract on another place, but we're going to boost his credit score for the new place. With the sale proceeds from his closing, he's paying off a bunch of debt. Once that posts, probably Monday or Tuesday, I take those updated posts and I do what's called a rapid rescore. I jam it down the throat of the three bureaus. And within 24 hours, I'll have a new score for him. Instead of waiting for those creditors to report once a month or so that they do on a random day, I'm going to jam it down their throats and get it done in a day.
How many points have you seen a credit score go up in a short period of time? What's your record?
Well, this person that we're doing tomorrow will be about 120 points.
120 points. Holy
Just
cow.
debt service. He's paying off $220,000 in debt.
Wow.
Holy moly.
Yeah.
So cool that it's so automated now too, though, because I feel like there's no limitation. So you can work with people all over. They don't have to come to your office anymore. It's changed a lot since I first went through this process.
I miss some of
I don't
that.
have to see you
Yeah,
if I don't
it's
want
true.
to. I can get you everything.
It's true.
So how many people can you help? Who do you really work with?
Since COVID, I would say I used to do maybe 5 to 10 loans a year pre-COVID. Well, maybe a few more than that, out of state. It was just a part of my business. Mm-hmm. I now average probably about 50% of my closings out of state in a given month. So maybe 10 plus loans in a month can be out of state. which is totally different. Just Arizona, Vermont, Virginia, a lot of my military going back and forth California to Virginia. It's interesting how that's changed.
Tells me that if I'm a buyer of real estate, I need help. I need a lender that's good that I can trust.
Yep.
I need a real estate agent that's good and I can trust, because this stuff is hard.
It's nice that they're streamlining. I always thought it's pretty easy for you to tell. If it was just up to Ben Lerner, right, just up to you, you could probably evaluate someone pretty quickly.
Well, and that's
not
the
like
difference between originating, right, Hal? Is like the difference between a loan officer that takes it seriously and knows what they're doing, has some experience. They're going to see the story and put it out there correctly for the underwriter. Because underwriting can be like walking through a snake pit, and you don't want to put a foot wrong.
That's the jury, so to speak, in the lending
Correct.
process.
Yeah.
But it's good because it seems like somebody's got a history of paying. They've saved money. It's not like they're going to suddenly become a risk problem.
Right.
Last thing I have a question on: noticing any changes on the fire insurance realm? Anything from the lending side that you talk about, or anything that you've seen?
The only thing I would say,
Homeowners, I should say.
Yeah, I mean, I'm not noticing any big change in the marketplace. The only thing I would really say is I really implore people to shop, because there's a huge variation in the different companies and the offerings that are out there. I mean, to the point of, we have a closing coming up, and the policy they settled on is $2,500, and they had quotes as high as $15,000. That's $14,900. Wow. So it's just huge variations.
Okay.
So yeah.
So if people have questions about where to go for fire insurance, they can call you as well.
Absolutely, yeah. I mean, I'm happy. I'll give out a couple of names. I like to recommend normally like a retail insurance company, and then maybe a broker, so they can see the difference there. But
they're actually adding that to the RPA. Have you heard that? The contingency for the
interesting.
insurance.
Yeah. It's never thought that would ever be the case. Never thought about it until the last couple of years.
Right.
It's an important topic for sure.
Used to be the day before.
We're having some fun around here of keeping track of the total number of transactions that Hal has in his office has done in his career. Do you know how many loans you've done in this community in your entire career?
No, but during the COVID years, it was a crazy few years there. 10,000?
Wow.
Oh.
Yeah.
Think of all the people that you helped then. If you did 10,000 loans, wow.
I have to do some math here.
You've been a good thing for this community then, Ben Lerner. Thank you.
You've given away a lot of money.
Well, I don't think he gave it away.
Well, they had
but
to pay
he's
it back.
funded.
Funded.
Funded a lot of dreams.
Yeah. Had to start somewhere.
Yeah.
Right?
It's true. It's true.
Are you giving any away?
Yes, with the
I'll get in
proper
line.
collateral, I'm giving it away. So yes.
Darn.
So, Ben, let everybody know once again how they can get a hold of you. And
Yeah. You can reach me. My website is blerner.com, and that's BLERNER.com. Or my phone number is 805-441-9486.
Just giving out that cell.
That's right.
yeah, cell phone. And lady and gentlemen, let's give ourselves a round of applause for our 100th podcast episode.
Guys.
Yes.
Congratulations.
A big thank you to Mr. Kingman for being here for all 100 of them. We appreciate you.
That's right.
Speech, please. I mean, you have anything to say?
No, this is a fascinating endeavor that you guys trusted our company with. We hear great things on our end, and it's more from an educational standpoint of just educating the community. They want free information. I mean, that's why the aggregators are so popular with people that are in the space. And as much free information as they can get. Now they know that they can get it locally with people that you can trust, whether it be Hal, whether it be people like Ben, where you guys are doing so much frequency that it's easy on a consumer like myself. That information needs to get out to the community, and you guys are doing a really good job at doing it.
And you've been phenomenal, Jeff, in terms of helping us, learn how to get this done and always helping. So thank you.
Couldn't do it without you.
It's my pleasure. And like I said, I told you guys, I don't think it was on the podcast, but I truly enjoy this because I learned so much about an area that I don't normally know that much about. And now I have people asking me questions, and I'm like, hey, call Hal.
Hey, Jeff, can I share a quick story with you before we sign off?
Sure.
We had a potential buyer from the Bay Area come down and meet with one of our buyer's agents looking to purchase a property in the county. And he said he's been listening to our podcasts and he wanted to do business with our buyer's agent because he felt like he knew us. We never met him in person.
cool.
Right, yeah.
He felt like he knew us. So thank you for what you're doing to help the community.
Well, it's you guys. You guys are the ones doing it.
Where's the birthday party?
The birthday party?
For 100.
Oh, the 100th.
100th, yeah. Okay.
Someplace with tequila.
Am I the only one thinking party? Okay.
Cinco de Mayo's right around the
Cinco de
corner,
Mayo,
isn't it?
that's right.
Oh, we can't say that, can we?
Why not?
Why not?
Sure we
Well,
can.
we don't know when this is going to air.
5th of
so.
May. Oh, man.
Cinco de Mayo is right around the corner today.
Yeah, that's right.
Yeah.
But yeah, it was last week. It was a fun party.
Yeah.
Sorry you didn't get the invite.
Invited,
Hal.
yeah.
All right. Well, everybody that listens, thank you very much. We appreciate you. If there's anything that we can do for you in regards to real estate on our side, you can contact Hal at
805-781-3750.
and
Yep.
there's a website, halsweasey.com. It's hard
Yep.
to remember.
Or-
SWEASEY, not ZY or EY. It's not like Patrick. Not
Yeah.
Z.
Yep.
All right, everybody, thank you so much. Thank you for being here, everybody, and we will talk to you all next week. Thank you for listening to the Hal Sweasey podcast. Be sure to subscribe and rate this podcast. Check for it in your feed for the latest information on the San Luis Obispo County market. The Slow County Real Estate with Hal Sweasey podcast is available wherever you get your podcast and on halsweasey.com, where you can find current listings and other real estate tips. halsweasey.com, that's HALSWEASEY.com. I am James Bueno, Director of Marketing for the Hal Sweasey Group. If you're looking for anything real estate, give us a call, 805-781-3750.
San Luis Obispo Real Estate Podcast with Hal Sweasey is also on YouTube. Now you can see people talk about real estate in one of California's hottest markets. Get the latest episode on the podcast page at teamsweasey.com or subscribe to Hal Sweasey on YouTube. Hal Sweasey is a licensed California real estate broker. DRE number 01111-911. The Slow County Real Estate with Hal Sweasey podcast is a production of AGM Podcasts. Subscribe wherever you get your podcasts.